Hello traders, welcome to my channel and a new educational video. Today we're going to talk about how I use techniques of combining volume profile with price action concepts, or in this case we're going to talk about what's considered smart money concepts. If you're familiar with ICT and all his trading techniques, then I'm going to show you how I use all things in conjunction in order to help me find the best higher probability setups. When I started my trading journey back in 2017, I started purely as a price action trader, and I did get familiar with a lot of the ICT smart money concept style terminology. However, as I evolved and I got more into futures, I started using a lot of volume profile and eventually order flow as well to help me with my setups. And now I use a combination of all three styles. But in this video, I want to show you how you can combine volume profile and smart money concepts into a very powerful combo. So here we have a NASDAQ chart. This is where we're going to go over an example that happened earlier in the week. There's a lot of examples. You should back test this. I'm just going to go over this specific one and break it down for you. So first, let's just bring in the whiteboard. I do like particularly the breaker pattern. I think is a very powerful price action pattern, which is basically a false break of a level. So with the breaker pattern, let's say you have the market coming up and then we have a move high over a previous important significant swing area, and then we break down. At this point, we've established an order block, basically the last in this case down candle before the up move that broke the structure. So in a breaker, instead of coming and finding support here, this would just come back and break through, and then we would expect to turn this into a resistance. And in this case, we had the false break, you could call it. Basically, it's just a tap on resting liquidity. This is where large order flow is resting of passive sellers. In this case, a lot of aggressive breakout traders potentially are getting trapped trying to long on this level before we come back. So how would I look now to combine this with volume profile? Well, with the profile, I would then look to see, I'm going to look at session volume profiles or a fixed range volume profile and see if I can identify some nice high volume node areas that I can frame my trade around. If you watch my volume profile videos, you know that I advocate a lot to just look for entries in the low volume node zones. That's pretty much the areas where volumes drop off, because these are the areas that are most likely to give us rejections. Okay, so let's now go into a chart and look at how this would look in practical terms. So starting out in the higher time frame, this is an hourly chart, and I have applied on the right side a long-term volume profile, which I use to identify the main high volume nodes and low volume node zones at the edges. And we're focusing on this high volume node right here. You can see this week we've had a very nice bullish week, a lot of positive news, trade deal with China, etc. That led to a gap up open on Sunday, huge Monday rally in the overnight hours. And you can see that on Tuesday, we continued to break higher. Let me actually change this because this is actually Tuesday. This is not Monday. Right there. Okay, so then on Tuesday overnight we held we had a nice push up into the New York Open, and then we made the high on Tuesday. Once we get to this point, I know we are within this high volume node. And again, this high volume node is coming back for like the last year on my higher time frame charts. I know I'm expecting to find support at this area. You can see right at the open of Tuesday night into Wednesday's candle, we find support over here and we start pushing up toward the Tuesday highs. And this is where the setup happened, which gave us an opportunity right into the European Open. So this was a pre-market trade. So let's go into the 5-minute. And here, let's go on the chart replay just so we can frame this better. And I'm going to cut this off right at this candle right here. Okay, so let's the volume profiles load. So we have regular trading hours from Tuesday afternoon, and this is the extended hours starting at 6 p.m. on Tuesday going into Wednesday. Okay, so everything that you see here, this is Asia session, and then right here at 3 a.m. is when London opens and we get an injection of liquidity. We have highs from the Tuesday's regular market hour session, big resistance in this zones, as you can see right here, and I'm identifying all this nicely defined high volume nodes. Even though we're trading now into this next session and we're developing this profile from the session, I'm still going to reference the previous day's previous session as well, especially a regular market hour session. So I would identify this, and I'm going to draw the main areas of low volume nodes. So you can see here we have, this would be a resistance zone that we came into. This is a support zone. And then we have over here another support zone, which, as you can see, in the overnight we opened, we did come down into this very important hourly level from the hourly chart. It held here at the close on Tuesday, and now we retested it here in Asia and held, and we start pushing up and holding above this low volume node zones from the previous session. Okay, and this is where our breaker setup is going to happen. It's actually going to be what's called, what smart money concept traders call a unicorn pattern, where we have a combination of a fair value gap and a breaker block. So in this case, you can see if I just advanced on a few candles, so right there, so you can see we had highs of Tuesday, got rated here right at 3 a.m. during the London Open injection of liquidity. And then this block that we have here, this originally, this was our order block, because this was the last down candle. This is a 5-minute time frame, last down candle before the move up that broke above a significant level. So when we come back, we would have expected this to hold as support if we're going to maintain the bullish structure and just to continue higher, making new highs. This is not what happened. You can see we had a very impulsive, clean breakthrough below the breaker block. So now this below the order block, which now becomes a breaker block, we came right into VWAP. So we can expect, some support in this zone now. And we also have the fair value gap pretty much, this entire zone now becomes a large fair value gap as well. Okay, so we have the breaker block within a fair value gap zone. So this is now a unicorn pattern in the making. Okay, so now we broke below. So now for me, I'm gonna make this red. This one, I'm just gonna take it off now. So now this zone is gonna become now a resistance area. Plus, if you see, there was a clear support right here, right around 21,305, and we just broke right through that. So now we expect broken support to become resistance as well. And now, as far as an invalidation, you could go into this highs, but we do have a very large range here. So if you want to be more aggressive with your stop, you can put it right beyond the edge of this node here that we have from the overnight. So I like to use high volume nodes a lot to guide me in terms of my stop loss placement as well. So you could have an invalidation here. Price on a test back should not go beyond this consolidation that we broke through, okay? And so if we hit the play and just keep moving candle by candle, you can see we do wick below that VWAP. We start coming back. This is also, this blue line is a 21 EMA, which is a moving average that I like to use on the lower time frames when I'm day trading along with VWAPs. And there we go. We came up. Clear rejection now from the breaker block. And, if I let this play out a little bit more, we did come down, chop more. So it did come all the way back into VWAP again. And then eventually we come down back into the hourly level. Like for me, in terms of where to take profit on this, I would focus on the bottom edge of this high volume node that we've made overnight. Plus you can see its confluence with this zone coming from the previous session as well. So this would definitely be a first, what I would call trouble area, where we can expect price to reverse and then back into the higher time frame low volume node support, which was also the lows here from Asia. And we have a very important hourly level. So if you were, if you had several contracts on, you could have scaled a little bit right at the bottom edge of this node, point of control as well. And the rest definitely taking it down out at the low of the Asia range. Okay. But you can see again, this is an example. Obviously, I'm just looking back and showing you a case where this played out, just so you can understand the concepts and how I use all this confluence of elements. Now, I'm not gonna go into this, but if I wanted to add even more confluence, I also use order flow trading. So when we came back into this retest, I would have been checking in the footprint charts as well to see what kind of absorption I identify when we come back here. Nice confluence. We have the low volume node zone. We have the 21 EMA back test. We have the breaker and the fair value gap retest back. Broken support. So a lot of things. I like to just line up different confluences to help me make the most informed trading decisions. Okay. So that is in a nutshell how I like to combine volume profile concepts with smart money price action techniques. And with these two together, you can make some really good trading decisions, and you can have a very powerful combination that is going to help you in your trading. Okay, so with that, I'll leave you. Leave a like, make sure to subscribe for more content like this, and I will see you all in the next video. Thanks for watching.